A REIT stands for a Real Estate Investment Trust. It is a mechanism through which investors can access the physical property market without the hassles and costs and, in fact, inaccessibility of buying direct physical property. REITs are companies effectively listed on the Johannesburg Stock Exchange. The business model of a REIT is fairly simple. We own a portfolio of properties. These could be shopping centres, industrial parks, office buildings, residential units, and collectively these generate rental income. Off that we pay expenses, as one would normally do, your rates and taxes, your electricity, repairs and maintenance, etc. You're then left with a net property income amount. Off that you deduct the amount that it costs you to fund those assets from a debt point of view. Generally the REIT sector has approximately 35% debt, the balance being made up of equity. Once you've subtracted the interest payments, you're left with a net property income amount. That figure is then distributed almost in its entirety to investors. Therefore, you as the individual investor in a REIT effectively shares in 100% of the net rental income that's generated off a property after having taken into account the financing costs. Therefore, you are able to access stakes in some of South Africa's most iconic properties on a liquid, easily tradable basis with very minimal transaction costs.
Not every investor can invest in a mega mall, for example, the waterfront Sandton City, but through listed property, through REITs, one would have the opportunity to be able to get exposure to these wonderful assets. What one can do is one can purchase these on the stock market through online share trading or through a broker, whichever method that one decides to, and one then gains exposure to these REITs. Further to that, it is very difficult to purchase a physical property. It's time consuming and the costs are very high. With listed property, with REITs, it is much easier to invest in them, it is safer to invest in them, and the time and the liquidity that comes with the stock is much more favorable. One puts one's money behind a management team that has the know-how to manage a portfolio of this size, and what it brings is exposure to multiple assets rather than one individual asset, therefore reducing the investor's risk. One also gets gearing, that these funds are generally geared around 35%, 30 to 35%, so the gearing is low and conservative, yet one is buying into a system where gearing is in place.
If you are investing in a listed REIT, you're generally looking at probably an 8% return on average, an 8% return or 8% growth on your distribution. Your return is then based on a yield of the purchase price. So when you look at the shares, and all these are once again are listed on the Johannesburg Stock Exchange, where you can get an idea as to what the yield is on a day-to-day basis by simply just going to the print or to the websites of the various financial institutions. You get an idea as to what yield you can buy these shares at, and that would be your distribution yield. At the moment, the yields range anywhere between 6 and 10%, and in the growth of that distribution, once again, average is about 8% at the moment. In addition to that, as an investor, you can also look forward to some form of capital growth on the value of the shares. And really, once again, the big difference between investing in a REIT as opposed to any other investment is that the REITs are easily tradable. Your stockbroker will trade them for you, or you trade them through your various stockbroking websites. But it is an opportunity to get out of your investments quick and easy, whereas direct investments, generally your capacity to get out of the long-term property investment is just that, it's long-term. So that really is an advantage for the day-to-day investor.